Hello, welcome back. So, NVIDIA reported its earnings and the stock spiked about 26%. Huge surge today for NVIDIA. You can kind of see that here in our tool. 24% is actually where it ended today. Still an insane increase from yesterday. Now, let's take a look at the earnings report. And obviously, you see AI here because it's the thing these days and definitely helps, drive some profit. But Nvidia's earnings were actually impressive indeed, and so it does make sense that it went up on the news. However, we're going to examine the financials in a little bit more detail and discover whether it makes sense to buy today with what kind of data we are having today for the company. Now, as you'll see, the company reported first quarter earnings for fiscal 2024 on Wednesday, and a stronger than expected forecast that drove shares up 26% at some point, with an EPS of 1.09 adjusted versus 92 cents expected, a pretty nice beat over here, and a revenue of 7.19 billion versus 6.52, so a pretty handy beat over here. But the important thing is the fact that they said that they expect sales of about 11 billion plus or minus 2% in the current quarter, more than 50% higher than the Wall Street estimates of 7.15. And obviously that's a massive increase than what was expected, and this is why you are looking at this insane surge today. Now, you have to remember that with these expectations, they have to fulfill these expectations next quarter, because if they don't, they may get hurt the same way they actually got a lot of extra stock price today. They may get hurt if they don't fulfill that. So the bar is going to be higher. That's something to remember. Now, prior to the after hours move, NVIDIA stock was up 109% so far in 2023. So basically exceeding any expectation, doing insanely well. The stock price has gained a ton this year. And they're doing better and better. So it is a company that is obviously great. The problem with this company has always been the valuation, and this is what we're going to be examining, just to see whether it has become cheaper, or maybe it's an interesting buy over here. And of course, the article is also mentioning NVIDIA's strong performance in data center, shows that AI chips are becoming increasingly important for cloud providers. And again, AI is all the fast these days. However, NVIDIA's gaming division dropped in revenue, and NVIDIA blamed the decline on slower macroeconomic environment, which is the case and is to be expected. A lot of companies have indeed suffered some loss there. Now, what is the concern? What is the problem with NVIDIA? If you take a look at the yearly chart, let's take it to a year over here, you can see that the stock has basically had an insane run from where it was back in, I think, like November 2022. So it has gone on a tear pretty much, and has been doing better and better. And this move today was massive, approaching 370, 380 basically dollars right now. Now, you will see that the price to earnings ratio and the price to free cash flow are well above 200. And you got to remember that price to earnings ratio and price to free cash flow ratio has to do with what the company has been doing in quarters. So, for example, it's different when you calculate it for the TTM, like the last 12 months, and it's different when you calculate it for the fiscal year. And so, as this new quarter, for example, gets added to these calculations, and gets added back to the TTM, for instance, you are going to be getting even higher values, and you will eventually be reaching maybe 300 or even more in terms of the PE ratio and the price to free cash flow. So getting more and more expensive. And the thing is, somebody is looking at this one and they are like, okay, the company is doing amazing. They're getting so much extra value, and it becomes almost like a fear of missing out. And what tends to happen is that when you have this kind of move today, it's very likely actually that the company could go on a roll for like 2 or 3 days, just because more people learn about the results. They get excited, they buy even more, propelling the stock upwards. And this is why it tends to be a nice opportunity for traders, like the first like 2 or 3 days. Whether you are on the bullish side or the bearish side, it pays to follow the trend in this like first 2 or 3 days, because again, traders get the news. Basically, they enter, they start betting on the company, on the ticker symbol, basically trading it fiercely, and the trend tends to be your friend in these situations. But as a long-term investor, you have to ask yourself, is it a good investment to buy Nvidia right now? And a good investment is not only about a good company, obviously, it's also about a good price, because there is always a price for anything. And right now, for instance, with this P ratio, or let's just get the price to free cash flow ratio, which is more precise because it's free cash flow. What this is telling us right now, and again, this is going to be even higher, and you see how high it has gotten in the past few years as the company is actually getting higher right now. What this tells us here is that for every $247 of our money that we are depositing for buying NVIDIA shares, we are getting back $1 of free cash flow. That's exactly what this means. And it's actually not precise. It's going to be higher, as I mentioned earlier, just because it will get adjusted with today as we're progressing through time. So it's even higher than what you are actually seeing right now, again, as it gets adjusted for for today's results. And this means that we are basically, if we're buying today, we're paying an exquisitely high amount for a valuable company for sure. But again, we are paying an insane amount. You can imagine it exactly as paying $250 for $1 of outcome, pretty much. And the company again is a company that doesn't have much debt. It's doing fairly well. The margins have been a little bit suppressed lately. Typically, it does a little bit more. But again, the macroeconomic conditions have played some toll on that, and it makes sense. And overall, it's a company that is a great addition to portfolio. But again, the price matters. Really matters insanely, actually. And to discover exactly what kind of how expensive or how cheap a company of this sort or any sort is, we are going to be using a discounted cash flow model because it actually gives us a valuation of the stock price based on the cash that the company generates, and it's important to gauge whether the current stock price is expensive or cheap enough for us to enter right now. And obviously projections matter, and we can even be too confident. And even though the revenue growth of the company hasn't been great in the past year, overall they have been having some great averages in the past. And so if I pick really high numbers, let's just say that I just think that the company will be doing 15% for the revenue growth in the next 5 years, or 20 and 25. This is very high, especially for a company of this sort, which is already a pretty big company. Probably they won't be achieving this kind of revenue growth every year for the next 5 years, but they could actually be close to that. So yeah, let's just say that this is going to happen. And I'm willing to use the net income margins that the company was having at their best years. So I'm going to go 25, 26, and 27 here, which is like their best margins. And the free cash flow margin that I'm going to be using, actually, I am going to use the best that they have had, which is about 100. So I'm going to be using 100 to every of these or projections here. An annual return of 13% is what I'm going to be using. And I hit calculate. And you will see that with these projections, we are way off. And it kind of tells us how expensive the stock price is. And again, the problem is that people see the price of today. People see that the company is great and they think that this is a solid buy because of that. But you have to take into account the actual price of the stock, because again, how much you are paying really matters for the future results. And things can change abruptly or unexpectedly. And the problem is a minor thing that happened, like the company doesn't have much of a leeway. A minor problem, something goes wrong, this can go down 30% the same way it went up to 30%. And even if the big problem is, even if it goes down 30%, it will still be expensive. And so basically what is happening right here, the company could still go upwards because of the trend, and because again more investors and traders are going to be flocking for a while at least, and buying the company and buying the stock. Yet, the slightest mishap, this can really destroy the company's valuation, or I should say the market cap, bring down the stock quite abruptly. And it's a completely different thing to have bought at like $80 and to have ridden the wave pretty much to 400, and it's a completely different thing to buy today. So you have to take that into account when you are potentially thinking about buying this one, because of fear of missing out a potential trend here, or a potential ride to whatever would happen. Because if the price to earnings ratio or price to free cash flow is going to be like 300 in the next month or so, at what PE are you looking to sell when it reaches like 1,000? Like, think about this one for a while. How expensive would it have to be for you to sell when it is So I would just urge to have a little bit of caution here. Again, because with these kinds of companies, which are valuable companies, when they go up that quickly, people tend to really have the fear of potentially missing the opportunity and start buying the company at any price. And if you do that, you may really hurt yourself. Just think about it for a while. Just take a deep breath and think about whether this is worth it or not. Of course, it's your own decision at the very end. But I kind of wanted to lay down all the information here, just to lay out the information and tell you exactly what is happening with the company's finances. And of course, you're 100% free to take your own decision. And if you decide to buy this one, best of luck to you. And I hope you make some great money. Thanks for watching, and I'll see you in the next one. Bye bye.